So we have a small computational problem here in the money multiplier. So the formula to the money multiplier is whatever this initial deposit is multiplied times 1 divided by the required reserve ratio. So in this example, goes through a couple pages in our textbook. Somebody deposits $10,000 into a bank, and then it goes through all the different stages. But then that bank then has a required reserve ratio of 10%. So they need to keep 10% of that in the bank, but then that leaves them $9,000 that then they can loan out. And then that goes to another bank, and that bank has the $9,000. Then they have to keep 10% in. So then they can in turn loan out, $8,100, and it just keeps going and going like that. Assuming that nobody takes the money and, buries it in a can in their backyard. Assuming it keeps moving through the banking system, a deposit of $10,000 can create $100,000 of new money. And then how that's calculated is the 1 divided by the 10% or the 0.1 gives us 10. So 10 times that initial deposit means we've created $100,000 of new money. So in this example, if we have 100 million coming in and there's a 4% required reserve ratio, we would take our 1 divided by the 0.04. So it's 25 times. So 25 times the 100 million. I guess I can do that over here on the calculator. So if we take the 1 divided by the 0.04, you get the 25, multiply that by the 100 million, and then now all of a sudden you've got 2.5 billion or million, no, $2.5 billion, right? Because then you'd have to, that's add the million to that. Now, if your required ratio was 6%, you would take the 1, divide that by 0.06, so it's going to be a little bit less, and then multiply that by the 100 million. So then you'd have the 1.6 billion. So again, that's just kind of showing you how more money going into the banking system generates new money all over. And then the reverse of that would be true. If it's withdrawn from the banking system, then it's going to reduce the amount of money that they can loan and that people can, have to help expand. So we don't want those withdrawals. It would just go the opposite direction there. So you want to just understand kind of how that multiplier works to say, if we keep it in the systems, it enables the banks to loan more money, which creates more money, and that boosts our overall economy.